When we met at 6.5, we kind of had this story about Honeywell's transition. Now we're another 6 months later. We've identified it's been an interesting year. We still have a lot of macroeconomic issues, but your moves forward, whether that's been a series of acquisitions like Sparta, Healthcare Technologies, you're continuing to make investments. Forge, I'm seeing more commercials on CNBC than ever before. The story's transition. Do you think the market is starting to fully appreciate? Because I still look at your stock, and I'll end it here. I say, sometimes I feel like it's pure value. The way people assess it and value it, it's all margin driven and dividend driven. And then I look at it and I'm like, but there's so much innovation going on. Are people appreciating that?
Yeah, no, I think that's a very, very astute point on your part, right? Because, we are continuously investing in future technologies, but we also want to provide a compelling return for today's shareholders. And we've done that. I think we've got a very demonstrated track record of, growth and margin expansion. We've done that for decades, and if anything, we've accelerated our growth. But we also want to future-proof the business. So whether it's things like our sustainable technologies portfolio, which really will enable the world to have a much greener planet, whether it's our Forge offerings, our software offerings, whether it's quantum computing, whether it's our play in UAVs and UAMs, which is really the future of aviation. I think what's underappreciated, people want instant gratification. Well, how much is it going to get me this year? Well, it's actually going to get you a negative R&D investment. But the point is that if you don't seed and if you don't plant these future technologies, then the person who runs this business a decade from now won't have a viable enterprise. And when you are a Honeywell shareholder, you get two, or maybe three primary things. You get a company that competes and innovates and is a leader in just about every industry that we play in, and we do very, very well in those industries. Number two is we have a responsibility to future-proof the business as well. And I just gave you some examples about how we're thinking about the future and how we're also investing in playing these technologies. And three is, and I think we're very careful about how we deploy capital. I mean, we think that we're good stewards of our investors' capital. And, I think the U.S. Digital Design acquisition, which we just completed a couple of weeks ago, is a great example. It's a highly ESG-oriented acquisition. Basically, it allows first responders to actually arrive at a building an order of magnitude faster than through current technologies. It's a high-growth business. It fits our building technologies portfolio, and we bought it at a price point which was fair. We're going to get an ROI of 25% in year 5, and so it's still possible to buy good businesses at a value point which is attractive. And that's sort of the overall investment thesis for Honeywell, is you get all three of these elements. Careful deployers of capital and do it in a way that our investors look at it. Future-proofing with new innovation technologies that may not generate much today, but they will in the future. And then we play and we win and we innovate in the markets we play in today to give you a compelling return.
Yeah, and the diversification has been significant.